Hi everyone, welcome back to Web Educate. Today we are diving into one of the most important aspects of group accounts, which is Goodwill. We are breaking down the calculation of Goodwill, that is one. Two, the treatment of Goodwill, that is positive Goodwill, according to IFRS 3 and according to IFRS 10. In the previous video we just uploaded, we treated treatment of Goodwill, the calculation of Goodwill, not the story, not the treatment, calculation of Goodwill, and also explanation of Goodwill. But today we're diving into calculation of Goodwill and also its treatment according to IFRS, that is according to standard. That is IFRS 3, International Financial Reporting Standard 3, and also International Financial Reporting Standard 10. How Goodwill should be treated according to this standard. So if you have been wondered how Goodwill is treated in group accounts, don't worry, stay tuned. By the end of this video, you get it clearly. Calculation of Goodwill and its treatment according to IFRS 3 and IFRS 10. We still use the last example. The only addition to it today is just to tell us the treatment of Goodwill according to IFRS 3 and IFRS 10. But for simplicity's sake, we still use that of a last example, which is Kings. And this example, just only one example. Example 1. The question says, Kings PLC acquired 80% of the equity share. Acquired 80% of the equity shares of Queen PLC on 1st January. Equity shares of Queen PLC on 1st January 2020 for $700,000. For $700 million. When the fair value of the identifiable net asset, when the fair value of the identifiable net assets of Queen's PLC, identifiable net assets of Queen PLC of Queen PLC on 1st January 2020 was $780 million. It is the policy. Of the group to measure the non-controlling interest. It is the policy of the group to measure the non-controlling interest, NCI. That is NCI. On acquisition based on the proportion on NCI, on acquisition based on their proportionate proportion. Let me rub it off because this place is not containing it. On their proportionate share of identifiable net asset. Proportionate share of identifiable net assets. Required. The requirement is just the same thing of the, but requirement is now the difference. A is just the requirement B. A, calculate, because you must also calculate the group structure. Calculate the group structure. B, calculate goodwill on acquisition. Calculate goodwill on acquisition. Calculate goodwill on acquisition. And its treatment. In accordance with IFRS 3 and IFRS 10. This is the question. The question says, Kings PLC acquire 80% of the equity shares of Queens PLC on 1st January 2020 for $700 million when the fair value of the identifiable net assets of Queen PLC on 1st January 2020 was $780 million. It is the policy of the group to measure the non-controlling interest, NCI. That is non-controlling interest is NCI. That's the full meaning of NCI. On acquisition based on their proportionate shares of identifiable net assets. Required. Calculate the group structure. What's the group structure? That is 80% is what Kings PLC is acquiring from Queen's PLC. That means the controlling interest is 80% and the non-controlling interest, NCI, is 20%. Then B, calculate goodwill on acquisition and its treatment in accordance with IFRS 3 and IFRS 10. That is just what is the variation from the last video. Its treatment in accordance with IFRS 3 and IFRS 10. That's just the variation from the previous video. How is goodwill being treated in accordance with this IFRS? So I rub off the board so that I can present the calculation. Before I continue with the calculation, in the previous video we explained goodwill. The goodwill is an intangible asset. It's an intangible asset. What do I mean by intangible asset? It is the asset that can what? That is not feasible. That is not physical. That's what? That belongs to a company. So this is not just a figure. How this figure arise? Goodwill arise when the purchase consideration paid by the acquiring company, which is the parent company, the amount he paid is higher than the fair value of the net identifiable asset of the subsidiary, which the parent company is acquiring. And what gives rise to this? There are like strong brands, reputation, that is like you have a Close-Up, you have a My. You can see that Close-Up has a strong brand reputation, unlike My. If Close-Up is being sold, for example, one tube is being sold for, let's say, 800, My might be selling his own for 600. So that is the goodwill that Close-Up has over My. That difference of what? Of that 200. Because if you look at the product, the material that won't be different from the material, the ingredients that they use to produce the product. That is the toothpaste. But why is one being sold with higher price than other? It is the goodwill that one company have over another company, because it has a good reputation. Maybe it has been for so long a time, other than the one that just come into the market. So that is what gives rise to goodwill was, like, for example, like I said, strong brand reputation. So also loyal customers. When customers have one characteristics or behavior to one particular product over another product, that is strong. That is a loyal customer. They are very loyal to one product than another. Also, skilled employees. That is skilled employees that know how to design, how to package one product than another. That is skilled employees. You also have future profits, expected future profits. That is that the company is what? That that company is expecting to get in the future. Those are goodwill. Those are non-physical monetary items that come to the company based on their what? Based on how they exploit the opportunity they have in their what? In their organization. Okay, let's go to the calculation of what? Of the goodwill according to the question. You know, I've brought the question up, but you have it in the video. So calculation of goodwill. Number one on the items is, this is now calculation. Calculation of goodwill. Number one on the item is what? Is cost of investment. According to the question, you can say Kings PLC acquire Queen PLC on 1st of January 2022 for what? For 700. That is cost of investment. Cost of investment is what? Cost of investment. That is the amount that it paid to acquire the subsidiary. That is 700. That is the amount Kings PLC invested. That is $1. Let me put million here because of space. This million represents in account represents 60. And that is $700 million. You add NCI, add NCI, add NCI, NCI value at date of acquisition, add NCI value at the date, let me short it, at date of acquisition, DOA, date of acquisition. NCI value of the subsidiary company at date of acquisition, and that is what? Group structure. Oh, I prepared that after this so that you don't waste time. And that is the NCI value is what? The company acquire 80%, right? So let me quickly compute that here. That is A. Group structure. That is A of the. This is B. B of the question. This is A. The group structure is what? Who is the parent company? Kings PLC. Kings PLC is acquiring shares of who? Shares of Queens. Queens PLC. How much is it acquiring? 80%. What date? 1st of January 2020. You can see that is the group structure. It's acquiring 80%. That means the remaining 20% belong to what? The controlling interest is 80%, and the remaining 20% is the non-controlling interest belong to Queens PLC. That is the subsidiary company. So the NCI is now 20%. When you deduct from 100%, deduct 80%, remain 20%, and that is the 20% multiplied by what is the identifiable net asset? That is the asset of the subsidiary at the date of the acquisition. What is that is the 780, right? Just watch the question. 780 million dollar. And I want to crave your indulgence. If there is any, in my last video, based on calculation of goodwill, there is any grammatical expression, just pardon me. Okay. What is the, that is 80% of 780 is $156 million. If you add it, it gives $856 million. So this is our $856 million, and this is our purchase consideration. How much is being used to purchase or to acquire the subsidiary identifiable net asset? Purchase consideration. Purchase consideration. Okay. Less, now deduct. In accounting, when you hear less, that is deduct. Less identifiable net asset, subsidiary net asset at date of acquisition. Subsidiary net assets at the date of acquisition. And that is this amount. This is what the King's PLC is acquiring. So we're not deducting from the how much is being paid. 780 joined from 856. Let me log this off. The group structure. This is group structure. A part of the question, and this is B part of the question. Okay, when you deduct that, what do you arrive at? You arrive at 76, and this is our goodwill. This is our goodwill. And for your understanding, you can see that the amount that the parent company paid to acquire the subsidiary company, you can see subsidiary net asset. This is net asset. The amount he paid to acquire the subsidiary net asset, which is 780 million, is the amount he paid is higher than what? Than the net asset value. Than the net asset value. So the excess, the extra figure here is what we call goodwill, that he paid to acquire the subsidiary company. And this is what that means, like I said, that means the company is performing. Because if the company is not performing, if we have to pay lesser, this figure will be what? Will be smaller than what? Than this figure. If the subsidiary company is not performing. Because in the first place, that is the essence of what? Of the parent company to acquire the subsidiary company. That means there must be an advantages that you want to derive from what? From the subsidiary company. For the synergy, for the combination of what? Of the business, for them to combine together. There must be an edge that subsidiary has over another company. For the parent company to acquire what? The subsidiary company. So that is the goodwill. So like I said in the introduction, if you have been wondered how goodwill is being calculated in the group account, this is it. This is the breakdown of it. And that is the explanation that I've given. So condition of the B part. This is calculation. And the question asks how is being treated according to IFRS 3 and IFRS 10. So that is the last part of what? Of the question. That's the last part. So we now take it one by one. This is the calculation. We did A, that is the group structure, and this is B, calculation, and conclusion of it is what? A, conclusion of it is the treatment according to IFRS 3 and IFRS 10. Okay. Treatment of, let's just say, positive goodwill. positive goodwill according to one, IFRS 3. What did the standard say? International Financial Reporting Standard, IFRS 3. So according to IFRS 3, the calculated goodwill, according to IFRS 3, business combination. Business combination. That is, this IFRS 3, the subheading, the heading of this IFRS 3 is what is business combination. According to IFRS 3 business combination, the calculated goodwill, the calculated goodwill of $76 million is recognized as an asset. Is recognized as an asset. It's recognized as an asset in the Consolidated Financial Statement. In the Consolidated Financial Statement. When you hear Consolidated Financial Statement, what does it mean? That is the group accounts. You know, parent company has its own account. Subsidiary company has its own account. That is, has its own financial. It has its own balance sheet. It has its own P&L. So separate company has their own financial statement. But when they have combined, according to business combination, when the parent company acquired the subsidiary company, that means they have combined. So they have to present a single financial statement. That's what we call what? Consolidated financial. They have consolidated the two separate financial statements to become one consolidated financial statement. So I continue. The calculated goodwill of $76 million is recognized as an asset in the Consolidated Financial Statement. Consolidated Financial Statement. And tested annually for impairment. We are going to treat impairment later. And tested for impairment and tested annually for impairment instead of being amortized. Instead of being amortized. Okay? Instead of being amortized. So that is the treatment of goodwill in accordance with IFRS 3 business combination. So the calculated goodwill of $76 million is recognized as an asset. 1. 2. Is recognized as an asset in the Consolidated Financial Statement. And secondly, tested annually for impairment. Instead of being amortized, the goodwill will not be amortized. It will just be what? Tested for impairment. So we are going to treat impairment in the subsequent video. so that you get. But this is just the what? The good should be what recognized as what? As an asset. In the what? In the fees, under the fees asset. You know, like I told you in our previous video under financial accounting, where we did the equation, balance sheet equation. I told you about the categorization of assets, liability, and capital. Assets has to be what? Has to be at the top part, then followed by equity and followed by liability. So that's categorization. So the goodwill is what? It's recognized as an asset in the consolidated financial statement. That is in the what? In the balance sheet. So it will be at what? At where the category of what? Of asset is. It's going to be. Is not going to be in the what? In the liability, no, in the equity. It's going to be treated under assets. So that is that about what IFRS 3. Let's go to IFRS 10. IFRS 10, treatment of goodwill. Treatment of positive goodwill according to IFRS 10. IFRS 10 Consolidated Financial Statements. IFRS 10 Consolidated Financial Statement. IFRS 10, this is the heading that you find it under IFRS 10. That's the heading. Consolidated Financial Statement. Okay. How is it being treated under Consolidated Financial Statement? The goodwill calculated. The goodwill calculated of what amount? $76 million $76 million is shown only in the group account. Is shown only in the group accounts, not in the separate separate books, and on the separate books of parents or subsidiary company. Treatment of positive goodwill according to IFRS 10 Consolidated Financial Statement. The goodwill calculated of $76 million, which I've calculated, is shown only in the group account and not in the separate books of parent or subsidiary company. That is, it's treated as under Consolidated Financial Statement, which I've explained. It's not going to be in one the parent company, no subsidiary company. It's not going to be there. It's going to be in the group account. That is a single account that was prepared after they have combined. And like I've said, the difference from this and the IFRS 3 treatment is that IFRS is not what? Is going to what? Treat it what? As for impairment. Tested it for impairment annually. And not to be amortize it. And it's going to be what? To be recognized under what? Under the Consolidated Financial Statements. Under was recognized as an asset. Like I told you, in the balance sheet, you have an asset, you have equity, you have liability. Don't mind my gesture like this. Don't just mind it just to buttress my point. Just to buttress my point that I'm given. That is just demonstration. Don't just bother. Some lecturer just do it gently, but that is just my nature. So this is the end of the video. If you have been deriving value all along, don't forget, if you are a new subscriber, please do subscribe to the channel. If you are new to the channel, do subscribe to it. And if you are an existing subscriber, don't forget to continue to share our video. And as I said in the last video, I created your indulgence, appealing to you that you should not mind our former video that we have been uploaded in the past 2 or 1.5 years, which have stopped, but I've started another one about 3 weeks ago. Those ones, about 1.5 or 2 years, they are not cleared. There is a comment under one of the video that it is not clear, which I also know. So continue to support us by sharing the video, subscribe to our channel so that you continue to give value like this. So by the grace of God, every week we'll be uploading video under accounting related courses. Financial accounting, financial reporting, SFM, cost accounting, all the related accounting courses. Then maths and English also. Because a lot of students find maths hard. We're breaking maths down. We're breaking maths down so that students will understand maths. Thank you. See you in the next video.